Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, I sound like a broken record at this point, but if you've been watching the market over the last, let's say, I don't know, 6 months, it's at all-time highs right now, which means obviously volatility is super low. Of course, they're all going to look fairly the same. The NASDAQ also shooting to the moon at all-time highs, also volatility very low. The only one that looks a little bit different as well is the IWM. It's been like this for a while. It's kind of been bouncing around. Volatility is higher over here, and it's kind of been in this range over here. So what are we going to trade? Well, what I'm looking to do this time is have a little fun. So I'm going to let you decide what you want to do. We are going to buy a vertical. And when we're buying a vertical, we're looking for the lowest volatility. So in this case, IWM, as you can see here, is 24 or 25. It's listed up here. We're going to go backwards. The NASDAQ is at 7. Again, 7 down here, 7 up here. So the lowest one is the SPY. So right here, it's only at 3. And again, when volatility is low, we can look to buy verticals if we like. That's the best time to do it. So what I'm going to do here is I'm going to let you decide. Now, as a contrarian, my play would be obviously when I see things shooting to the moon, my bet is over the next 45 or so days, I'm going to bet it's going to go down. But I'm just guessing, right? There's no right or wrong. Nobody knows the future. So if you're a trend trader, you're going to make the assumption it's going to go up from here. So if you're a trend trader, you're going to buy a call vertical. If you're like me and you're a contrarian, you're going to buy a put vertical. So I'll show you how to set up both of them. So we're going to go here to the 47 days, which I'm doing this on a Saturday. So on Monday, this should be exactly 45. And the price is right at 501. So if we open this up, what we like to do is we always like to buy, if we're doing a put vertical, we like to buy the put directly above the stock price and sell the put directly below the stock price. On the flip side, if it's a call vertical, we do the opposite. We buy the strike just below and we sell the strike just above. So let's do both of these. So I'll buy the put vertical right here. I'll make it $2 wide. I'm going to do this blast off so you can see them both. And what are we looking for? Remember, we're looking to pay roughly 50 cents per dollar in width. So in this case, this is $2 wide. We're paying 84 cents, which is about 42 cents per dollar. That's fine. When we're buying verticals, we have much more leeway. It's right around 45 to 55 is what we're looking for, but we can choose anything we like. If I do the call vertical now, so remember in the put I'm buying above, selling below. For the call, it's the opposite. I'm buying below and selling above. So I'll buy the same vertical if it was a call. And you see here, this is $1.20. So how much is that? Well, that's roughly 60 cents per dollar in width. Again, totally fine, totally up to you. What I want you to be aware of here as well is it's no coincidence that these add up to essentially $2 on the nose, because this is the exact same trade, right? I'm either buying it hoping it's going to go up or buying it think it's going to go down. So they're the exact mirror of each other, which is exactly what you see here. If one is, let's say, roughly 80 cents, the other one should be roughly $1.20, because they should add up to the width of the strikes. It's essentially the same trade, just shooting up and shooting down. But the point of this is we can do either one. So come Monday, if the stock price doesn't move from 501, we'll do this $2 wide vertical. If you believe like me as a contrarian, it's going to go down over the next 45 days, you'll buy the put vertical. If you think it's going to go up over the next 45 days because you're a trend trader or whatever tools you use, you're going to buy the call vertical. And just a quick reminder here, this is our last trade for February because I will be traveling. We will pick this up again in March. If you, however, like to keep trading, I do have an alert system, and I will be doing the alerts while I'm away because I can do that without having to make videos. So if you want to keep trading and you want to learn how to trade through my real-time alerts, just hang on for a second. Right after this video, I'll show you how to sign up for that. Otherwise, enjoy your February. I will see you back in early March. Happy trading. See you then. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.